What's up, traders, and welcome back to M.I.C Forex. Today I want us to continue with our training, and today I want us to look at support and resistance. Straightforward. I want us to look at support and resistance today. And before we do that, I still continue to urge you to subscribe to this channel. Hit that notification button so that when we put up a new video, you'll be the first one to watch it, and you can be able to follow through what we are doing. You can be able to follow through what we are doing. So straightforward, let's just continue with our training. And as I said earlier, because we are just trying to simplify everything. Today I want us to look at support and resistance. Support and resistance. Resistance like that. Make this one big. Something like that. Support and resistance. Resistance should be single S, not double. Alright. So what is support and what is resistance? First of all, let me define these two terms in just normal, or the what you call the layman understand, or the dictionary understanding. To support means to be in the side, or to agree. To support means affirmative, or just to agree. That is the simplest I think definition I can give. So if I say that I'm supporting you, it means that I'm agreeing with your sentiments. If, for example, you are supporting M.I.C, you are standing with M.I.C, you are in agreement with M.I.C. Whatever you are doing in line with what M.I.C stands for. What about to resist? I think this is the opposite. Resist, something like that. This one is not to agree. So these are two opposing terms that are being used here by forex traders to be able to make a decision into the market. Let me make it more clear. So support and resistance, but now in terms of forex now, we've nothing to agree, we've nothing not to agree. That is just a layman understanding. Let's look at a proper illustration like this. So there are things, or there are terms in forex market. Last video we were talking about market structure, and I told you about monopoly, about oligopoly, although we did not discuss it into details. At this moment, I expect you to be able. I expect you to be able, to define. This is our first low, our first high. Then we have the higher low, high, higher low, high, something like that. So this one I've already done it myself. Even if your mentor did not do that, then you have me here to be able to show you that. So this one is not something that you don't know. It is something that you guys know, and I've done it to you myself. Now in this video I want us to go deeper into getting a way to get an entry using these two very important concept. And one is support, the other one is resistance. And I've told you, to support means to agree, and to resist means not to agree, or to differ. Now this is just a very simple a definition. But now here, let's come into terms of forex. Now forex traders, they say, remember, this is price, this is movement, this is price movement. Whenever you see up and down, means this one is price movement, this one is price movement. And so they are saying, or this concept say, at some point market makers yes, market makers, they they have set some levels that they don't want the price to go below. They don't want the price to deepen below this point, and that is what they call, a support. In normal or in finance terms or in economics, we call it price ceilings and price floors. This is a floor. This is a floor. Floor means, where you put your tiles, where you put your 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 cement in terms of a nail and all that. So this is the ground, if I may say so, and this is the ceiling. But in forex, we don't call it ceiling. We call this one the resistance. Resistance. Let me explain further. Now, market makers or the big boys have set certain limits going down to be the floor. In other words, they don't want this price to go below this line, and this is what you call the line of support. So they are supporting a certain good or service to remain at a specific price above this area. So they are supporting, and going up, they are resisting any further increment of prices. The price, say for example, the price of something like timber. Let me use timber as an example here. So the price makers or the price determinants, they are going to to put a floor, or they are going to put support into what the price. They don't want the price to go below that, and they are also going to determine the highest price it will go, and that is it. So any attempt by the price or by another stranger or intruder or another third party forces trying to force the price to go up, then it will be resisted by these particular market makers. It will be resisted. So having arrived at that point, I believe you are together. If this video is interesting to you, please like it, put a comment, tell me or tell us what next you require from us. But as much as we know, we are going to be systematic in terms of our training, so that by the time we are reaching the end, you guys will have a proper way to follow, and you'll have a proper way to understand how the forex market grows. So now we come to these are the two concepts. Now, how do we make it a strategy? The people who trade this particular concept, how do they put it together to be a strategy? Now look at this. Let's say, for example, this price is moving up. This trend is bullish. So we want to be waiting for opportunities to buy here. Remember, I told you that you need always to align with the trend. So you want opportunities to be buying there. You want opportunities that will give you buys around these areas. So let's assume, for example, this price is at this zone. The price is at that point, or actually at that particular point, so that it now makes sense when you go now into proper discussion. So we said that you need to connect for a trend. For us to be able to define a trend, you need to connect at least 3 reaction points. So our reaction point number 1 is here, number 2 is here. So we are waiting now to buy at that particular point. We want to buy when the market now hits that point. But now the question is, how do you buy? Do you just buy when the price hits there, or do you just buy at this point? Now, remember, you guys, I think this is a note. This is what you need to carry out from this day going forward, that you don't just open trades. I repeat again, you do not just open trades. What you hear people calling signals, a signal is an alert. It is what you have waited for. It is what you wanted to see. It is what makes you enter into the market. When they align, then you can enter the market. When you lose, you must lose. You must lose just because it was not a bad trade, but because the market went against you. A bad trade, I define it by when you enter a trade, when you have not seen at least all the factors that you call yourself a trader for. You must enter a trade when you see all your procedure following one another happening. So now, I want now to define for you this strategy in terms of what we call SOP, Standard Operating Procedure. So what is the SOP for trading, support, and resistance? And remember, this is through M.I.C. Your mentor might have told you differently, but I'm going to give you details that I'm very sure your mentor never gave. And if you think it's a joke, listen to the end. Number one, okay, I need to put this one is a SOP for support and resistance. For support, this video might be longer a bit because I want to give everything. I want to give you all the details. SOP for support and resistance. Support and resistance. For support, for trading, support and resistance. Now, remember here, we are going to be able to manufacture a signal. Number one, determine or draw, identify and connect. Identify. What is this? Identify and connect price reaction points. Price reaction points to form a trend or a structure. To form a trend. This one I've already, that's why I said I'm teaching you chronologically so that you may be able to know from this class what do I expect next to form a trend or a structure in or on item frame or in item frame. Remember, I told you Forex has no language, it has no grammar. You just need to understand, okay? You just need to communicate. Forex, there is no grammar, there's no, you are not so careful with use of in, on, between, those words. I think they are called the conjunctions or what, something like that. So to form a trend or structure in item frame, when you do that now, I think it is what we have done here. We've in this case now the trend is bullish, so in our case the trend, so we want to buy. What do you do next? Now there are things that you need to start familiarizing yourself here. This term are called weight. Weight is a constant. Weight is constant in Forex. Waiting. And you wait patiently. You don't wait and you are running up and down. You don't wait and you are going to the toilet, or you are drinking a lot of water. No, when you are waiting, you are just calm, relax. Remember, I told you that trading item frame, which is this item frame, HTF. Remember, I told you that trading Forex is like being an artist. You are an entertainer. You must entertain yourself. You don't trade when you are frowning. So wait for the price to come to your pure high, to your POI. Pure high means point of interest, and our point of interest, we remember we've already drawn this trend line and we are waiting for this market at this point. So this is our point of interest. It might touch even here, but the point is it might even touch after 2-3 days. But what I want to insist is that wait for the price to come to your trend line. So in this case, the pure high now is the trend line, which is now our support. Remember, we want to buy, so we are going to wait for that market now to come and touch our zone. So let's do it together. So let's assume that the price has really respected our waiting and it has touched on our zone. Right. At that point now, I want to give you two scenarios how you can take this trade, or two scenarios again how you can be able to trade support and resistance. I think I should have told you actually that one before we started. I think this one I'm just going to be mentioning as a by the way, but it's a very serious So two ways to trade support and resistance. Number one, you can trade what we call trading bounce, and that is exactly what I'm teaching, trading bounce. You can trade bounce. Number two, trading breakout. Trading breakout. Wow, I know that I'm the best mentor you guys can have. No mentor is going to be teaching you these things because they want you to continue buying signals, asking you buy and sell on TikTok lives and that kind of story. But when you listen to me, when you follow what I'm really teaching you, you not only become a good trader, you're also going to be a very good input into the market. Now, you can trade, bounce. You can trade breakout. A bounce means that this price is going to touch here and then bounce back. We have a way to trade that. There are some instances the price might just come and break out like that. Do you just sit down and do nothing? No. I also teach you how to trade bounce, but not on this particular video. So today we are going to be talking about support and resistance, trading bounce, or the price bouncing. So I think it will be safe here for support and resistance. I put this one, trading bounce. So we need to know how we can trade on bouncing, how we can trade on bouncing, how we can trade on when the price bounces. Now, let me change this color to, I think blue is beautiful. Yes. Now, in trading bounce now, wait for the price to come to your PO high. That is the trend line or the support. The support. Are you together up to that point? If you have not subscribed, do that right now. Point number three, drop to lower time frame. Let me write that for you. What's wrong with my mouse? Drop to lower time frame, for confirmation and entry. For confirmation. Do you hear now? You don't enter just any. There has to be confirmation. For confirmation and entry. For confirmation and entry. So you're going to drop to lower time frame to confirm. Then after you confirm, we enter. So I'm trying to minimize the chances of you losing money in the market. Remember, the profit that you make, you need to take your girlfriend out, you need to take your boyfriend out. So I'm saving the money for your family. I'm saving the money for your future. Don't just lose money anyhowly. I think your mentor doesn't want you to know this, but that's why I'm here. So you drop to lower time frame for confirmation and entry. And more specifically for a day trader like me, I think I need to train you to trade like me on a higher, I'd say on a higher time frame. So as a day trader, don't go beyond 4 hours, but mostly use 1 hour. So drop to lower time frame for confirmation and entry. So if you had used 4 hours for market analysis, that is for plotting these zones, you can take the trades in 30 minutes time. Every time go two levels down your highest time frame. If you're using 1 hour, go to maybe 15 or 5 for the best confirmation. You can go to 5 or the quickest. Let me use the word quickest. But for me, I use 15 minutes time frame for confirmation and entry in the market. So let me say, for example, here 15 minutes time frame. 15 minutes. So we are at the confirmation now. What do we need to know? What is confirmation? What is our entry? Now you do this. You wait for the price to bounce. Wait for the price to bounce. From there, at the support. I think that would be the correct word. At the support. In other words, we are saying, you wait for this price now to bounce like that. Oh, sorry. I think I need to use a bigger, but I think this one is even also important or clear. So the price has bounced. Let me now change the color. This one to to what? To blue. The price bounces. The price bounces. The blue movement means that the price has bounced. The price reacts from this zone or rejects. The price has been, caused to go back. The price has bounced. So when the price bounces now, what do you do next? Very important. Remember, now we are at the point of waiting for. That is what we are doing. We are waiting for confirmation. Yes, the price has bounced. What next? Wait. How many wait are you seeing now? It is wait and wait and wait. Wait for the price. Wait for a retest. We call it a retest. In other words, the price comes back. That is the simplest English. Comes back to the support. This is what we call retest. So at the retest, what do you do now? See that the price forms these two things. Forms, number one, rejection candle at the support, at the retest. Rejection candle, or two, bullish engulfing candle. This one I explained to you last time. So you need to wait, see that the price forms a rejection candle or bullish engulfing candle. Let me show you what I'm talking about. So you wait for the price now. This now the retest. So at that point, you need to see at this point now, this is a retest, this is a bounce, this is a retest. The bounce, the retest. The price bounces back at this point. The price is retesting this particular zone. So you need to see, the price forming something like this. Remember, I said for rejection candles, the color doesn't matter. The color for the candles doesn't matter, but you need to see a candle with a long wick. This is now the rejection candle, or you need to see this particular setup of the market. Remember, when the price is coming back, we have red candles. So you need to see another. Remember, this candle closed down there. You need to see another candle that completely engulfs, or marks or covers the red candle with the body of the candle. This is now the setup for, or what you call, the bullish engulfing candle pattern. So after you see that, now open a buy position. Open a buy position or a buy trade. Open a buy position. Set TP. I've taught you what is TP personally. If you have not seen that, go back to my previous videos. You'll be able to see what is take profit. Set TP at the next high and set a sell at the last low. Simple. From number 4, we are doing what you call confirmation for the entry. This is now where the forex eats. This is where now people don't want to be patient. They don't want to do anything. So you wait for the price to bounce at the support. The price bounces here. Wait. You see, everything is wait and wait and wait. Wait for a retest. And I've said retest is a price comes back. Remember, we are on lower time frame. The price comes back to the support. See that the price, or wait for the price to form either number 1, rejection candle, something like this, or bullish engulfing candle. After that, this is where you are going to open your trades. When this candle now closes at that point, when the next candle is opening, please set your put your buy position there, set your stop loss at that point, and target the next eye. In this case, is going to be your resistance here. If you are using this particular setup for confirmation, this is where you open your trade. At the close of that candle, before the other one opens, you set your a buy position there, set your stop loss at that point, and then you target the next size. So this one is going to be your entry. That is your entry. Let me put it in black. That is your entry point, and this is your entry point. You see? So it does not now. You need to be clapping for me for telling you exactly when you need to enter the market. You don't just enter the market. You enter the market at specific, standard operating procedure has been seen in the market, and that is where the difference comes in between forex traders and these other fellows who are just in the market for the sake of. Let me repeat for the last time now. So at this point you need to see candles coming down like that. Let me put this one into red. Another red there. So for bullish engulfing candle, you need to see something like that. This one is green. Let me use green at that point. Then you open your trade at that point. You can extend this so that you know where next you are going to be targeting. So something like this. If you are still in forex and you have no idea what you are doing, I think you need special prayers, and I'm going to be offering prayers. But before that, even with the prayers, you need to have something in your mind. You need to have something in your brain. Remember, forex is like a computer. Your brain, in terms of forex, is like a computer. When you feed garbage, when you command garbage into your computer, it will give you garbage out. So if you put nothing into your brain, at the time you will expect something from it. In this case, the profit now. You've no skill, you've no knowledge, you've not done anything. The only thing that you have is MT4 or MT5. You put nothing into your brain. The point when you need profits from the brain will give you nothing. All right. So you have to be. It's a balance that you need to do. And more specifically, please have some knowledge. So let me repeat it now for the last time and making it very simple. You wake up, you want to trade, go to your charts, open your trading view, determine a trend or a structure. It must have more than at least 2 touches or at least 2 price reaction points. Number 2, draw your support and resistance using you can use these slanting trend lines. Okay, you can also see price that is rotating from point that you need to have an horizontal support and resistance. That one is still the same, no problem. So after you place your trend lines, you wait for the price now to come and touch your zone. When the price touches your zone now, you can have 2 ways to trade support and resistance. I have said number 1, it is to trade the bounce, and the next one, it is to trade the breakout. We've started with the trading bounce. So when you want to trade the bounce now, you wait for the price now to bounce. This is where the bounce happens. Oh, sorry for that. This is where the bounce happens. Bounce happens at this particular point. The bounce is here. The bounce is there, and then this is a retest. This is a retest. What is this? Retest. How to write this in? Retest, like that. That is where the retest happens. So at the retest now, you wait, you drop to lower time frame. Remember to drop to lower time frame. Don't take trades in higher time frame. Okay, it doesn't make a lot of sense or doesn't make a lot of difference. You can still take trades in 1 year. In 1 year candle. But the thing is, you need to have confirmation on lower time frame. Why do we go to lower time frame? So that you can align. Aligning means because we want to buy and the trend is bullish, we want to take the trade when the market or when the price has confirmed intentions to continue bullish. And this intention to continue bullish, or the signal, or the signs to continue bullish, it is when the market now bounces from this point, doesn't break, all right, then makes a retest. At the retest now, it also doesn't break. It gives either a rejection candle, this format, or bullish engulfing candle. That is confirmation for an intention from the market to continue bullish. Intention from the market to continue bullish. And when you have that, then you are set to go. What you need to do, open your trade here, then you can just try to balance your emotions, but there will be nothing about emotions here, because you know your target one, it is this immediate reaction point here. When the price is towards there, I think I'm going to be teaching this one. I'm teaching about what we call trailing stop loss and setting of break evens. So you just be patient. I know it's not easy, but imagine with M.I.C, it can be very easy, because you know your target. You know that your target, if you win more than you lose. Just set your stop loss, then target here. When the price now comes to your targeted area, close the trade, withdraw your profit, take your girlfriend out, go and enjoy. All right, or take your boyfriend out. Wow, take your boyfriend out with the profits from forex, and don't forget to tell them that this is a strategy that was taught by M.I.C forex. I have no credit there, but I will be happy. God will bless me where I will be now. I think that is a very well explained strategy. We've taken two concepts, that is support and resistance. I've done layman definition or dictionary definition, and then done two illustration and given you notes. My guys, if you do not understand what M.I.C is telling you, I don't know why you need to pay for classes for, to other members. For those people that have come to my class, I don't teach price action, you know that. But this one is to reach everybody in the world. Everybody in the world. And because now the space for YouTube is too huge. Remember, we always have limitation of time. You also have other constraints of maybe payments. But now in YouTube, the space is too big. The social media cannot get full. You know, it's so big, such that it can never get full. So you're going to, to give everything here. So guys, please subscribe to my YouTube channel. Share these videos. Like, comment, let's have some interaction so that we can make this channel grow faster. So at this point now, let me now delete this, and then we go to the real market and look at this a particular, let me show you the real market point, so that we can be able to see what you are talking about, if it is true. Now, many times people are going to be asking me, when you're marking of a trend line, do you use wicks or do you use body? The best way to place your trend line, you can look at that point. You can also put it here. That is when you want to to touch on the bodies, but you can just go to change the price presentation into line. Then you'll see exactly where that price is tapping on, If you look at this, if you use the line or the line chart, you'll see that kind of presentation. So you can use that one now, and then this one is for the bearish. Let me give you examples in bullish first, because we just done our analysis in the bullish, and then we can also go to bearish. You can see the price reaction here from this point, and finally this point. Let's try to manufacture an entry at this point. What do we need to do? Okay, I think we can change this one to candles now, like that. So what we need to do here, we need to wait for the price now to come and touch on our support, because the price is bullish, because we're having higher highs and higher lows, like that. All right, so we need to wait for the price now to come to touch on our zone. Let's go to 15 minutes time frame now. 15 minutes time frame, and see if we can really be able to get that particular example correct. So you see the price comes, touches our zone, very proper rejection, and the candle closes inside. You can see the body of the candle closes inside or above the support. So the price comes, this is a bounce, this is the bounce, sorry, this is where the touch is. So the price bounces, then the price makes a retest, the price makes a retest, and at this point now you see a proper rejection. The price, retests with this candle, but immediately gives a very huge, gives a very big, a rejection candle. Rejection. I said, remember the color doesn't matter. So after this price, has given you this rejection candle, this is where you open your that's why you open your trade. You can set your stop loss at this last low. Remember I said last low, although this price looked to almost wanted to come and hit your stop loss, but remember you are protected by a stop loss. So that's where you open your trade. Where do you target next? This particular high, because you need to draw at this line also. So this is where your TP is going to be, and you can see immediately your TP is there. Immediately the price comes to touch your TP, it starts to react. From that point you can close the trade and open another particular trade. Are we together? Very easy, guys, very simple as taking tea. Actually it needs to be at the third touch, so that you don't ask me which touch is going to be good. The third touch, touch 1, touch 2, touch 3, you take the trade. Let's get another example. Okay, there's one that I was looking for here. Let's see if we can get a sell entry at this particular point. Let me use this, something like that. If I think when you go to line you get something different. Yes. Let me refine it like that. So what do? You go to 15 minutes time frame now. Let's wait for we change this one to candles. Yes. So we can call this one 1, 2, touch 3. So we want to manufacture a trade here. We want to see if we can get a trade at that point. So this is already let's go to 15 minutes time frame. All right, actually it started touching here. So the first touch is here, then the price gives a bounce, it bounces from here. Then next is this particular a retest here. Then the price in this case does not give, it doesn't give what we call rejection candle. It gives bearish engulfing candle, and this is where you open your trade into sales. That is bearish engulfing candle. The price then you put your stop loss there. Although it was threatened, the price keeps on dancing at this area. At this point could have been so careful a bit, because it could have just hit your stop loss then continue down. So just maybe adjust slowly, something like that. But you can see the results. Of this particular concept or strategy. You see, when you win very handsomely, and this is where you target, because your line is there. I think I would have put it at that particular point, because this is now my trend line, like that. So when you see maybe starting to go up, you can be so careful. You can see that trade is giving you how much? That is 1 to 7 ratio. 1:7 ratio. So that one is a very good trade. That is a very good trade. Let me look at one more example, and this case you can go to something else like AUDCHF. Let me just choose randomly so that you guys don't think that I'm just choosing some and not others. So this is a 1 hour time frame. 1 hour time frame. Let's look at let's try to manufacture some entries here. Okay, let's try this. Oh, this one did not touch, so this one is very tricky. Let me just not use that one. All right, very beautiful, very beautiful, very beautiful. First touch, second touch. Our entry is going to be looking at our entry at this point, and the entry is going to be in buy position. In 15 minutes time frame. So, all right, here we are. These people are telling me to pay. All right, so the price comes and touches, this is a first touch, then a bounce, then retest. At the retest now, you can see a very good a very good rejection candle, this one. So at the close of it, you open your buy position. Set your TP1 at this point, take profit 1, usually the immediate high, then your stop loss at that point. However, the price now keeps on dancing from this point, and when lastly it came to that point, you can see a very good move away from that point. I think over those examples you must have seen, of importance it is to know where exactly to put your stop loss. You have to be very careful with your stop, so that you are not just stopped for no good reason. And this one tells you that the price is not going to be just obeying you. The price will obey its own forces. So that is support and resistance. So one of the advantages of this particular strategy is that it is very easy to use. It doesn't require so many of concept. Just two concepts: support and resistance. The only thing is you need to do, drop to lower time frame, look for confirmation, enter. One of the biggest disadvantage of this particular concept or strategy, it is, it will take a lot of time. Number one, it takes a lot of time to play out. Number two, even after taking a lot of time to play out, the management of stop loss, you have seen, we are really struggling to know exactly where to put the stop loss, but the strategy works. So those people are trading with the small accounts, you can be stopped for no good reason when you really had a very good chance of winning the trade. So, and this is something called, I think what is playing out here is what led to what people are calling smart money concept, and that is exactly what you call liquidity. So when you don't master where liquidity is, then you are in big danger. You are in a very big danger. So, but when you know where the liquidity is, then it becomes so easy for you. What am I saying? I'm saying that this is a very good strategy. You only need to be careful with the measurement of your stop loss, but it's a very good strategy. Guys, I want you to put up your questions in the comment section. Give likes, comment, tell me what you need to hear next. I think next, even before you tell me, we're going to be talking about trading of support and resistance, but in this scenario now, trading the scenario 2, that is a breakout. Now we are trading the bounce, and we've said in many cases the bounce is going to be effective. It is going to be effective in the third touch. It is going to be very effective when you are considering the third touch. So thank you very much, guys, for your time. My name is M.I.C. If you have any question, there is anything that you need to to do with us, or you want to partner with us under whatever arrangement, we have copy trading. We have also platform to provide our students and our traders with signals. I also offer one-on-one training. If you think the recorded one is not serving you best, we can have physical training and also online training. So for you to be able to get that, just go to my website, micforex.co.ke. Click on the WhatsApp button that you find there. That's my number. It will take you directly to my WhatsApp, and I'll be there to reply to you or to talk to you one-on-one. Thank you very much, guys, for your time. This is MIC Forex.